All right, now we'll get into stock market analysis. Important information that I want you to look at right here. Do read this chart. It talks about our approach to the market and you then adopting our analysis, bringing it into your analysis, and the importance of trade ownership. Stock market multiple time frame analysis and projections. I'm going to take a deep dive into the S&P 500, looking at weekly, daily, and 2-hour charts. I'll take a peek at our market condition monitor, the MCM, and look at how that aligns with the analysis, what you can get out of that, and how you could have used the MC up to your benefit just in recent weeks. So let's take a look here as we switch over to the S&P 500. We are looking at the weekly on the left and the daily on the right. Now, for those of you that are new members, those of you that may have just seen the analysis that got posted this morning, Matt does that, and I redid the analysis and sent it out to our members after that. So the charts will look different. The reason for that is because I had enough time pass by here on the daily chart and enough information off of the intraday charts to tell me that an important low was made right over here on that big down day that we had, where it fell 100 points intraday and then began to move up. And you could see the new cycle structure formed in over here. And I'll talk about how I formed that in a moment. This is a look at the weekly chart. Now, one person, they had put a question up that I didn't answer, and that is, based on the movement in the S&P 500, would I then upgrade where I thought the declines would be in the market? Well, essentially, the market does that on its own because it raises, as it moves up, it raises the supports. Now, why is there a projection on the downside in here of some significance? Well, you see, the first one that I have right over here is down to that 23%. That's only down to 48.23. That would be a 4% decline. A 4% decline in the conditions of both cycles coming down is too small. This was 10.9% right over there, as you can see, in that correction. The likelihood of it coming down here during this time frame out into April and stopping at 48.24 is very small. The likelihood of the lower track right over here getting down to this is the 38% weekly, this is the 23% monthly, at around 46.74 is much higher. Here is that 34-week coming up here, what is very likely to get down through, which says to me that sometime in the next several weeks, we're going to have a decline that starts and then come down most likely to this level over here of 46.71. You know, when the market was strong up here and hadn't turned down yet, and I'm talking about a correction, most people say, what are you talking about? Why can you even speak to that? But the market rhythms tell me that. It's just normal money flows. It's normal that there would be money coming out, and this would be something like a 7% correction down over here. That is really too optimistic, in my opinion, still, with this lower level here, maybe at 45.82 is the potential. But I would say, you know, the 7% number down over here under these conditions is, to me, the most obvious. Now, you can see in here this what looks like a harami cross. Now, harami is Japanese word for baby. So it's the body within the body is where you get baby. It's maybe not quite, but it is definitely a hanging man, which you see us right over here, which means that what happens is that sometime during the week, there are very good sellers, and then it comes back. And those buyers during that period get hung. That's why they call it a hanging man. And what normally happens is that it comes down the following week, or it'll make another star right over here and then come down the week after that, and then complete the topping formation here. That's what I will be looking for here on the weekly chart. Momentum here on the reversal scout, still strong. This is where it turned up right over here. It confirmed this bottom. It suggested this top would be taken out. That all happened absolutely perfectly. And now, if you want to follow the same perfect rhythmic patterns that you have in here, and you can see, we're going to be looking for a topping in here and then a move to the downside. You can see in here all of these periods where 2 cycles were coming down. You can see the mid cycles where, like you have right over here, it comes down to supports, gives you hammers, and then moves up again. This was so strong, could barely fall right there in the mid cycle. But what happened again in the corrective phase here with both cycles, you had the big decline. Every single one of these was more than that 4% number that we're talking about, only to this level. So it means that there is likely going to be a decline. Now, if you now go to your platforms and start buying all the puts and selling everything, you're making a big mistake. When we give this kind of analysis, we don't say go short it right now. I'm giving you the indications of what has a highest probability of happening. This is the probabilistic analysis. And when you see the daily and you see the 2-hour charts, you will say it's time to wait. Let's let the market prove to us that is going into that corrective phase. Right now, this is showing a ton of strength. Now, here is your daily chart here. And what this shows us on the daily chart is that you've been in a uptrend here that was established, around the beginning of last November, and it has continued up through this whole time frame right over here. This cycle right over here was exceptionally strong. It went up the whole way and then just had one day coming down to complete that. Here you could see it had 3 days coming down to complete that. These are incredibly strong cycles. This was one day over here. You only get this in monstrously strong upside moves. Look at the slim ribbon PO on the bottom. It turned green over here when you're looking at November. It has stayed green ever since. And every time it gets below the 25, and then moves above it, it gives you momentum resumed indications. And you could see every one of those fantastic. You can see in here where it's so strong, it can't even tick down in there. And the slim ribbon giving it the support it's supposed to on the way up. We always talk about slim ribbon is very good for support and resistance indications. That brought me right over here where I'm looking at this time frame right here and these projections. Now you could see what we have in here is an upper channel and a lower channel. And both of those are still configured positively. In other words, the lower channel does not show a break of this cycle low yet. It could only do that. It gives us negative information. This is why you don't short yet. This is only 3 days into the advance. You don't want to short that yet. You want to wait till it tells you. If it breaks 4920.31, this right over here, it suggests the intermediate correction has started. Even if it threatens it, I would start to indicate that this would be then coming down. I would be building this lower channel in here and showing it coming down into these lower levels right over there at those supports. But right now, I don't do that because I don't want it to look negative. It's not negative. Everything we're looking at here is positive, but looking back at that weekly chart, I am anticipating that there will be some peaking developing in here, and we don't have that yet when I look at this. Now, what helps me understand the movements that I see in here, besides the momentum, the configurations, the translations, everything I'm talking about. And if you don't understand that, it's important for you right now to consider taking our cycle analysis workshop, because that jargon will turn into real language that you understand if you do that. So we're still looking at an upside cycle structure right in here. So when I grab this chart over here, this is going to show you both the daily chart on the left and the 2-hour chart on the right. And you can see in here that upward channel that it's going into, that's this rise over here. And I'm going to blow this up for you to see. So if you look on the bottom, you can see the translations in the cycle. In other words, each of these arcs are the ideal cycle. And you could see these dark lines. That's where the daily chart made its important lows, comes down and hits the support and then begins to move up. And look at these beautiful cycle rhythms that are in here. This decline that happened on that 100-point down day right over there came right at the timing for this important low. That meant there wasn't much more time to come down when it came down to these supports and then began to move up again. Let's take a closer look. You could see the slim ribbon went neutral and then turned positive again over here, as this now has established 4920.31 as that key cycle low. And if it gets down close to that or breaks it, it's going to tell me that something has changed as I look out in here, and that this uptrend, and what essentially we're looking at are the translations in here, and this showing the upside energies changing how this looks and giving us these higher highs and higher bottoms, establishing this uptrend. That's what makes the uptrend. The reason there are two arrows here is because they're showing you that the strongest energy is to the upside. It takes what could be a neutral condition, looking at these cycles on the bottom, and then pushing it upward and showing you how the formations come, and that tells you when something is positive. If this peaks, and I'm just going to put an alternative in here right over here, let's say this peaks early, and let's say this doesn't get up to that high over there, and then starts to turn down over here, and then breaks those lows, it will tell me that we're in that decline right over there on the 2-hour chart. And then what's going to happen in the next one, it will move up over here, it will hit some resistance, and then it will begin to move down again, and we'll be in that downtrend, and it will be defined in here on this chart, on the 2-hour chart. This is really important. I want to show that to you because then you get a good sense of how we use multiple time frame analysis. The 2-hour chart giving me information about the daily chart that you see there, and the daily chart over here giving me information about the weekly chart. So we work back and forth in time frames, the weekly giving us the most dominant information, then the daily, then the intraday. But when the intraday starts to give us information, we work back in the other direction. This is very advanced cycle analysis. I wanted to take some good time to look at the depth of this, but I think it's just amazing information. And this is how the team looks at this stuff. I mean, really to get the feel for the market. And that's why we have such a high percentage of success in our trade ideas, because we put this all together in the sum of the evidence type of analysis. So again, looking for the market to create a top in here. We're trading at 185% of the market cap to GDP. It's the second highest in history. That's 185%. In the time of the 2007 peak, just before the financial crisis, it was 107%. Now we're 185%. The valuations are beyond crazy right now. So those resistances should start to matter. We should start to get upward movement that fails in here and get a sign there on the S&P 500. Again, the big number in here will be when it breaks 49, 20, 31, and I say when because of the high probability that it will do so. That is a look at the stock market. I want to look at one more thing in here, and that is the market condition indicator. I'm sorry, the market condition monitor. And I have this set on time frames right now. So you can look at it on the trader version right here or on time frame version right here. And I have this, I'm going to go to the daily chart, and this gives you the indexes and the top stocks that we look at. And you can see in here on the daily chart when these things turn positive on our indicators. So the S&P 500 and the slim ribbon, you can see that where they turn positive. This was January 19th and November 7th when these indicators last changed. You could see how early you got the indication of the momentum being favorable here back in January, back in February, because the IWM was later over here back in January and back in November. Just unbelievable how these things turned upward. And you can see in here that Apple has now turned negative in during the beginning of this month. And it has been weak, and Matt showed you analysis in that. So this is just fantastic. If you want the 2-hour, which I just showed you, it tells you much faster when things change and when those conditions change, as you see right in here, looking at all of these stocks in the 2-hour. You can go down to 15-minute and 3-minute, which is available only to level 4 members for that version of it. Or if you want to use the trader version right here, where it gives you the condition setups right over here. And you can see I can scroll here on the very bullish ones right over there, or the ones that are very bearish conditions right in there. as I'm looking here at the short term. You want to look at the intermediate term, you can just click on that and change it. So this for level 3 and level 4, the market condition monitor, I wanted you just to get a good sense for seeing how I use this, and you get a look at how you got very early indications for this stock market turning up. So those conditions still positive right now, as you see, not giving you any indication that it is time to short. So now you can put your hands back in your pockets and let the market tell you. Don't jump ahead. If you start to get some indications, make your first entry small. There's a good chance you're going to be wrong, especially if you're trading against the momentum indicators. So I always say enter with a quarter position. If you're wrong, well, it's basically a flush room.